Good afternoon. My name is Marcus Noland. I'm the Executive Vice President and Director of Studies here at the Peterson Institute, and it is my honor and pleasure to welcome you to today's event on economic normalization between the United States and Cuba. We have three speakers today, and we will invert the traditional practice of presenting age before beauty by starting with PIIE Research Fellow Barbara Kochwar, followed by Reginald Jones Senior Fellow Gary Huffbauer, and Augusto de la Torre, Chief Economist for Latin America and the Caribbean at the World Bank. Barbara has written a number of books and articles. Most critical for today's event, Economic Normalization with Cuba, a roadmap for policymakers. This publication is for sale in the lobby at a significant discount, and if you don't already have a copy, I would urge you to go out and get one. Our second speaker, Gary Huffbauer, is one of these individuals who in front of this group literally needs no introduction. He is the Reginald Jones Senior Fellow here at the Institute, and he has written so many books and articles that rumor has it that forest preservation societies worldwide go cold with the very mention of his name. He is co-author with Barbara Kochwar of the highly topical Economic Normalization with Cuba, a roadmap for U.S. policymakers, which is on sale outside. Last but not least, and here at the iconoclastic PIIE, we not only put beauty before age, we put the host before the guests, is Augusto de la Torre, Chief Economist for Latin America and the Caribbean at the World Bank. Prior to joining the bank, Augusto was president of the Central Bank of Ecuador and had an economist at the International Monetary Fund. He did not participate in writing Economic Normalization with Cuba, a roadmap for U.S. policymakers, but I'm sure he believes it's a very fine book. After each of the presenters have spoken, we will have an open discussion, and as a consequence, I have asked the speakers, who have enormous amounts to say, to try to limit themselves to leave ample time for discussion of this both interesting and controversial topic. So with no further ado, I would like to welcome Barbara Kochwar to the podium. Thank you.
Thank you very much, Mark. That was quite an introduction. I don't know whether Mark mentioned that the book, Economic Normalization with Cuba, a roadmap for U.S. policymakers, is on sale at a significant discount in the lobby, but it is, and so it makes great Christmas presents and I guess Valentine's Day presents for your loved ones. My job is to just set the stage for recommendations and an analysis of some of the pressures that may help to shape the next route on this road. When we first wrote this book, we had in mind the fact that the winds of change were blowing gently in both countries, and we looked at some of the relaxations under the Obama administration of things like travel, allowance of people-to-people trips, and increases in remittances. And we looked at the economic reforms taking place in Cuba, and we thought we should probably take a look at this because something might happen in the next 3 to 5 years. And so we were quite surprised on December 17th when the two presidents announced their intention to increase normalization of diplomatic relations. I was actually on the tarmac on an American Airlines charter flight at the Jose Marti International Airport, and as an American, couldn't access internet through my cell phone, which hopefully will change with these changes in the regulations, and was informed of this by a very kind-seeming farmer from Michigan who was in Cuba on one of these people-to-people exchanges and said, this is a historic day. And I thought he meant because he was there on a people-to-people exchange and had been meeting with Cuban farmers, and this wasn't possible before. And so I said, yes, this is very important. He said, no, you don't understand. They've made this announcement. And I thought a Michigan farmer probably isn't going to lie to me. And when I arrived in Miami, realized by the questions from the immigration officials who were really interested in what is the best hotel to stay in Cuba, that this was indeed true. So Winds of change have accelerated, and we'll see where they go from here. The changes in regulations that were announced on the US side allow increased travel. You now no longer have to get a specific license as long as you fall into one of the 12 categories of allowed travel, which unfortunately doesn't include tourism, but lots of different categories in which probably most of the people in this room could fall. Including business training and support to farmers. And this is important in terms of setting the stage for what we hope to be a greater economic relationship between the two countries and greater competition. Travelers are allowed to now import up to $400 of Cuban goods per person, including $100 in cigars and rum. Remittances have been raised, and this is significant. U.S. remittances to Cuba are estimated at about $2.7 billion, a significant part of the Cuban economy. Quadrupling the allowance in remittances should have a significant impact on Cuba. U.S. citizens will be able to use U.S. credit and debit cards. This is a significant change and will make things much easier for U.S. travelers in Cuba and for Cubans to receive money from U.S. travelers. MasterCard has already announced that they will start allowing the use of their cards in Cuba starting March 1st, 2015 by U.S. travelers. And then the increased sales of telecom-related goods and services, which anyone who's tried to access the internet in Cuba probably welcomes this. In Cuba, Raúl Castro's program of reform, sin prisa pero sin pausa, so without any hurry but without pauses, continues. The increase in private sector activities has continued. Most of these are relatively low-skill activities, relatively limited and limited by the limitations the Cuban government still has on economic activity. The travel ban was lifted and has remained lifted. And the new foreign direct investment law, which was promulgated last year, has been put into force, and the Cuban government has put out a wish list of projects. There hasn't been a great international response yet, but the hope is that normalization of diplomatic relations between the U.S. and Cuba, particularly if the U.S. removes Cuba from the state sponsors of terror list, will increase also third-party investment. The government, in the meeting of the Council of Ministers, the removal of the dual currency system, or setting the conditions for the removal of the dual currency system, was set as one of the main priorities for the economic policies of 2015, and Augusto de la Torre will talk to us about that. This is one of the main constraints on the Cuban economy. Now, Cuba's economic challenges continue. Growth is expected to be greater in 2015 than in 2014, but Cuba is facing a number of very significant economic challenges. These will have a bearing on how the Cuban government is able to enact its reforms, whether it will be able to continue to have control over the political and economic changes in the country, and when and how economic normalization between the two countries between the US and Cuba will occur. And so this certainly bears watching. As mentioned, the exchange rate issue, and then estimated assistance from Venezuela, which has been about $10 billion per year, according to some estimates. Venezuela, as you know, is facing severe challenges, both due to its economic policies and the lower price of petroleum. So we ask, are Cuba's economic reforms, even with greater U.S. engagement, enough to address its serious economic challenges? And the answer is quite clearly no, they are not. And Cuba continues to have significant restrictions on economic activity. So we predict that the winds of change may blow slowly, starting with the fact that the Helms-Burton restrictions on U.S. economic activity remain in force, and it does not look as though those will be removed anytime very soon. U.S. companies can now sell more to Cuba, but the ban on financing remains in place, and the ban on significant economic activity continues. On the Cuban side, while U.S. the new regulations were published very quickly, I think many of us were surprised to see those published and come into force within 1 month. What about implementation on the Cuban side? I think it's necessary to ask whether Cuba will be as amenable to some of these changes, particularly if they occur relatively rapidly. U.S. will now allow sales of telecom equipment and services to Cuba. How easy will that be to actually implement in Cuba? There are always questions as to whether additional barriers will be placed on the private enterprise. One of the objectives of the changes in U.S. policy is to help support private entrepreneurs in Cuba. You've seen some rolling back of economic activity, some categories that had been, that Cuban entrepreneurs had tried, for example, selling clothes now is restricted to selling homemade clothes. You cannot import clothes and then resell them on the Cuban market. So that's still being worked out. I think it bears watching to see whether additional restrictions are placed on economic activity. The Cuban government retains a monopoly on imports and exports, and there's no mechanism yet for private economic actors to engage in international trade. And the Cuban state maintains control of employment. In the book, we set out 3 likely scenarios, and I think now we need to think about what U.S. negotiators can do to avoid scenario 2, the Big Bang with monopoly capitalism, in which economic interests become entrenched and serve as obstacles to a more competitive market in Cuba. What can U.S. negotiators do to pave the way for greater competition in the Cuban economy, rather than putting into place mechanisms that would prevent that competition? This would be better for Cuban entrepreneurs, the burgeoning private sector, and also for U.S. interests. So as Gary Hufbauer will set out, U.S. officials need to begin reciprocal economic negotiations. Not doing so could cause unfortunate results that we've seen in other transition economies. The normalization could proceed at a much slower pace with greater favoritism of vested interest, and U.S. firms and citizens will be pushed to the back of the line for commercial opportunities in Cuba. So Gary's going to tell us how this can be done, and then we'll hear a presentation on the unification of the currency system. So thank you very much. We welcome your questions. I hope I stayed to the time, I'm sure.
Well, we'll see if something happens, but meanwhile, so that Steve Weissman keeps his job, I want to urge you to buy the book. That's his. Steve is our person who gets all our books sold on the market these days. So, turning to the market, I'm going to just give a few ideas about nudging Cuba towards a market economy and satisfying historical claims. Neither one is an easy task. There are a lot of lessons that can be drawn from economic sanctions, but for today's remarks, there are 2 which I would say are key, that very tough and very prolonged sanctions do not guarantee political change, and there are a lot of examples of that. But the big but here is that with carefully designed carrots, we may slowly nudge Cuba, as with other countries, towards a step-by-step approach towards a market economy, and in the case of Cuba, satisfying historical claims. So, in thinking about this, we have to have in mind kind of a strategic goal. And I think our strategic goal, that is the U.S. strategic goal, should be trade and investment agreements with Cuba. Not a free trade agreement right away. That's obviously, Cuba is not nearly ready for that. A lot of obstacles there. But we could have a bilateral trade agreement, which was, much short of a free trade agreement. We've had those in the past. And we could have a bilateral investment treaty, and Cuba certainly needs investment. The amount of investment in Cuba today, as best we can estimate, foreign investment is remarkably small. It's under $1 billion, which is very small given the size of the Cuban economy. So those would be kind of strategic goals, but right now, how do we get there step by step? And I have laid out, this goes a little bit beyond our book, because things, as Barbara has mentioned, have moved much more quickly than we had guessed or anyone had guessed. But these would be some principles that I would recommend to the administration and to the Congress. Allowing exports for cash of consumer goods and intermediate inputs. That's cars, that's foodstuffs, that's all those great consumer goods. I know the argument would be that somehow the Castro government will seize part, but it's a little harder for them to seize part of the money that is being paid for the goods than on the other way around. So, and this speaks to U.S. interests, which have been pretty well frozen out of the Cuban economy now for 55 years. But I would condition exports of capital goods and finance on enumerated market economy reforms. And I would suggest applying a very strict filter on imports from Cuba. This is what, Cuba wants the money. This is where Cuba is more likely to see room for constructive negotiations. And the conditions should look for meaningful concessions and where appropriate compensation. It's not long before the World Bank and the Inter-American Development Bank and the IMF jump into Cuba. They have teams, and Augusto is one of the experts on this, who are, prepared intellectually and have followed Cuba for some time. And if they're given the green light, they can provide a lot of assistance for Cuba. But the but from my standpoint would be that the international program should be advancing the market economy reforms. But the final point I would say in these guiding principles is to be sparing on the retention of sanctions for political goals. And I would apply this little litmus test. Would we do it against China if they had this, whatever the political aspect is? And if we wouldn't do it against China, why apply or retain those sanctions against Cuba? Okay, that's guiding principles. Let's turn to the menu. I would suggest as it amends the Helms-Burton Law or repeals the Helms-Burton Law, Congress should give the President a menu of quid pro quos, that is, things Cuba should do in exchange for U.S. concessions. And I'm going to give some illustrative suggestions, but my recommendation to the Congress would be not to be too strict. Give the President room to mix and match, and this goes not only to the present President, but also the next President. Who knows how fast things will go, as Barbara said, during the remaining years of the Obama administration, but we can think about the next administration as well. Give the President some room, but give him some guidance. So here are some illustrative suggestions. President Castro has already said he wants Guantanamo returned, and that's no surprise. I would suggest that the return of Guantanamo to Cuba could be conditioned on the creation of a compensation fund, at least in principle, for justified historical claims by Americans who have lost property in Cuba. Coming more concretely, there is this big category of potential U.S. pleasure tourists, and we go into some numbers in the book, another reason to buy it. But the volume could be enormous of pleasure tourists into Cuba, American pleasure tourists. But I would suggest that we could think about a strict first-come, first-allowed quota that is on tourists going to Cuba, and the then progressive enlargement of that quota could be conditioned on such things as licenses for U.S. hotels, which currently have no presence in Cuba, and resorts likewise, though many other countries have their hotels and resorts in Cuba, and possibly Cuban payment into a compensation fund of a fairly small amount, $100 per tourist. Likewise, Cuba could be assigned a sugar quota. Again, we go into the history in the book, but a long time ago, Cuba had a big sugar quota. Now it has none. Sugar is a very valuable product in the U.S. market because of all kinds of wacko policies we have. But in any event, Cuba could be allowed to participate in that, but pay something into this fund. Other ideas. On the finance side, U.S. firms could be permitted to finance defined projects, provided Cuban construction workers are paid a reasonable minimum wage. And that ties into the exchange rate issue, which Augusto will be talking about. But the way the Cuban economy works, most workers get absolutely abysmal wages because they're paid in this national peso, which has very little value. Likewise, exports of capital goods, which are going to increase the Cuban economy a lot, could be conditioned on most favored nation treatment. That is, whatever treatment Cuba gives to Brazil or to Canada should be given to U.S. firms, and national treatment with respect to dealings to state-owned enterprises. As Barbara said, much of the economy, in fact, most of the economy, big economy is state-owned enterprises, so dealing with them will be a big part of the future. Just a couple of other ideas and then I'll stop. Bulk imports. Barbara mentioned that travelers can bring back $100 of rum and cigars, but bulk imports of these could be conditioned on MFN access to U.S. firms to produce such goods in Cuba. Brazil already is producing sugar in Cuba, and there'll be other examples as well, but U.S. firms are not there presently. Finally, and this is a big one, but Cuba is well known and rightly known for its health care, and one could envisage that clinics might be opened in Cuba to treat Americans who wish to have treatment there, especially at the older end of the age spectrum. And such payments could be conditioned on U.S.-owned clinics being allowed to operate in Cuba. Well, you could go into a lot of other ideas, and people in this room, I'm sure, will have them. But the idea is to have this step-by-step approach where no one step is so gigantic that it seems to threaten the Cuban government, but each one, step by step, gets towards a market economy. Thank you very much.
How do I activate this? Oh, there we go. Thank you. It's great to be here, and thank you for the invitation to join this very interesting conversation. I am going to talk about something that's a very, in some sense, much more particular topic, but in my opinion, it is the most important macroeconomic constraint to progress in Cuba. So bear with me a little bit because there will be some elements that are a little bit more technical, but I'll try to keep it at a high level, policy level. So this is based on a paper that's available. I hope you can get it outside or through the web, written together with my co-author, Alan Ise. And it was in response to a request by the Brookings Institute to use economic theory and the experience of Latin American countries to help think on how one can deal with this very complicated problem of dual exchange rate system in Cuba. I have a few slides to show you. First, you need to understand how the system works. It's very complicated, but these are the basics. Cuba has two currencies and two exchange rates. And people sometimes confuse them. They are two different things. The exchange rates, there's something called the Cuban peso, CUP, and there's something called the CUC, which is the convertible currency. So the Cuban peso can exchange 1-to-1 for state enterprises, 1-to-1 to the dollar, and for public institutions. But the same Cuban peso exchanged 24 Cuban pesos per dollar for the rest of the folks. And then you have this other currency, which is the CUC, which is 1-to-1 to the dollar. The two systems responded to different motives. The dual exchange rate regime, 1-to-1 and 24-to-1, is essentially a response to an external shock when they lost the aid from Russia and the terms of trade collapse. And so to protect a scarce foreign exchange for basic imports, they opened up these two exchange rates. The CUC, the new currency, responded to their desire to avoid the dollarization of the economy. You know, when your currency becomes weak, people like to hold dollars. So the Cubans said, instead of holding a dollar, why don't you hold this thing that I call CUC, which is going to trade 1-to-1 to the dollar. And so that's the reason. So it's important to keep this thing in mind because the unification of the exchange rates does not need to coincide with the unification of the currencies. Cuba could unify the exchange rates and yet keep two currencies. Like Costa Rica has the local currency and people use the dollar too. Cuba could unify the currencies and not exchange rates. So when you think about the exchange rate system in Cuba, you have three different challenges that are conceptually and practically different. One is whether and how to unify the exchange rates. Two, whether and how to unify the currencies. And three, what would be the exchange rate you put in place after you unify? Each of them is a gigantic macroeconomic task. So to understand the challenge, you have to understand what's special about Cuba in its exchange rate regime. And so I find four very important distinguishing features of the Cuban case that are not often found in other cases of multiple exchange rates. You now have a multiple exchange rate system in Argentina and in Venezuela. Those do not look like Cuba's in these four important respects. First, the dual exchange rate system in Cuba originated on an external terms of trade and external aid shock. It didn't originate as it did in Venezuela or in Argentina on capital flight. You know, people decide to take their assets out massively, and that may force the dual exchange rate system. In Cuba, it was due to a real external shock, which for me gives a little bit of hope that as you try to unify the exchange rates, you will not need to deal with this very complicated phenomenon of capital flight and capital financial turbulences. That should make things a little bit more manageable. Second, and you can see it here, when you look at where countries are before they unify their exchange rates, two things seem to matter a lot. First is what's my inflation rate before I unify? And second, how far apart are the two exchange rates before I unify? So Cuba, which is at the end, has the largest historical ever known spread between the exchange rates. 1-to-1, 24-to-1, the spread is 2,300% spread. There has been no other case in Latin America with such gigantic spread. In favor of Cuba, however, Cuba has a very low inflation rate. So the unification would begin with an initial condition of fairly low inflation rate. The low inflation rate favors Cuba's experience. The high spread makes it a very complicated challenge to deal with. The third, and this is perhaps the most important feature of the Cuban case, the dual exchange rate regime in Cuba is a fiscal scheme. It is the way through which the state gets revenue. The bulk of the central government revenue in Cuba comes from the difference between the two exchange rates. How does that work? Because there's a part of the economy that operates with a 1-to-1 rate. Those are the state enterprises, the foreign hotel operators. But the foreign hotel operators that operate with a 1-to-1 rate, when they pay wages, they pay the wages of the labor to the government employment agency. So the workers don't get the wages paid in the hard currency. The government employment agency gets a hard currency and it pays the worker with a devalued, much more depreciated exchange rate. So the system is really a big tax on labor. The government gets a lot of taxes labor in an enormous, exorbitant way in order to be able to subsidize the one-to-one rate for the public enterprises and for the public institutions. This is a hugely important topic because the way in which labor is taxed is completely contrary to the socialist ideals. The whole financial system, the whole state operates on the backs of the workers. The workers get about 5 cents on every dollar because the government appropriates in the middle. And so it's a fiscal scheme in that sense, but it's also a fiscal scheme in the sense that whoever gets to sell dollars or is forced to sell dollars at one-to-one is heavily taxed. That's the foreign hotel operators, for instance. And whoever gets to buy dollars at one-to-one gets heavily subsidized. And those are the state enterprises. So you have a huge system of tax and subsidy that's embedded in the exchange rate regime. That has a huge implication. It means that part of your challenge is to separate exchange rate policy from fiscal policy. And in order to be able to do that, one needs fundamental fiscal reform. And that creates a major complication to getting out of the dual exchange rate regime. You need a modern tax and subsidy system to replace the use of the dual exchange rate regime. So that's a hugely important characteristic that distinguishes Cuba. And the last one, of course, is that Cuba is not yet a market economy. It's far from being a market economy. So why would you want to unify the exchange rate regime? Well, the main reason why you want to do that is in order to get some economic efficiencies. You want economic actors to respond to more realistic price signals. That's why you want to unify the exchange rate. Otherwise, why would you want to do it? So you're expecting to get some efficiency gains. That's the raison d'etre of unification. But in a non-market economy, actors do not respond flexibly to price signals. So you have to do this big thing, and you're not going to get as much of a response from the economy as you would like. And that means that the pain of unification is going to be huge in the short run. The gains will come in the medium run and will come slowly. So I want to argue, and this is a slide that I'm going to kind of jump quickly, but I want to argue that the dual exchange rate regime is the most important and overarching binding constraint to growth in Cuba. It entails all sorts of inefficiency losses, starting from the fact that I told you it's a huge tax on labor, but it creates a fog of pricing and valuation. Because with those exchange rates, you really do not know what's the value of assets, what's the value of things, and you have very little information on what is the relative scarcities of resources in the economy. So the effects of this dual exchange rate regime are very pervasive. Another important effect is that it introduces a major wedge between the interest of the individual and the interest of society. Because once you have these two exchange rates, the name of the game in Cuba is try to somehow earn the hard currency. And that's why you have doctors driving taxis, kind of in stealth fashion, it's illegal, to earn the hard currency. And in one good day of taxi driving in stealth fashion, they make more money than what they make in 1 or 2 months as doctors. So society suffers in that the most talented people in the economy are using their talents to try to capture hard currency through unskilled activities instead of healing the population or teaching the kids or whatever. This is the other reason why you have so much prostitution in Cuba, because one way to get access to the hard currency is to sell sexual services in the tourist industry. So you have this dichotomy between private and social interest, which is exactly the other way of saying, here in the United States is very well known, it's the failure of the invisible hand. The reason why we like market economy is that sometimes when the markets work well, you get this invisible hand effect where individual people decentralize decisions in pursuit of their own private interest somehow get aligned with a social interest. The dual exchange rate regime in Cuba separates social and private interests in ways that is extremely offensive to the socialist ideals. So this is a mess, and the costs are immense. But getting out of it is very difficult because of this idea of short-term pain versus long-term gain. So the raw impacts of unification initially will be immense. They create enormous transfers between winners and losers, between losses to those that are subsidized, windfall gains to those that are now taxed. So this would be remarkable. It can produce a lot of dislocations. You can have import dislocations that can wreck your economy. And in the short run, the pain can very easily dominate the gains and render the whole experiment unviable. That's why one has to be careful on the conditionality that the United States or other countries put on Cuba. Because if you squeeze too much the conditionality, you will render reforms like this even more difficult than what they are to start with. So if you want to really design a system of unified exchange rate regime, what you need to get right is the transition. And the transition has to meet the two criteria I have in red there. The transition has to somehow cushion the short-term pain. Yep. And cushion the pain until the gains begin to materialize as the economy responds to the new relative price signals. And in somehow, the transition has to accelerate the gains, has to accelerate supply responses on parts of entrepreneurs and consumers, etc. And it has to be done in a way that ensures the viability of whatever comes next. That's why I argue in the paper with my co-author that it would be best to unify at a 24-to-1 rate. Although the Cubans would like to unify at 1-to-10 or 1-to-8, that seems to me highly risky. You want to protect yourself against downside risks. I only have 1 more minute to go, so I won't be able to show you the other slides. But what we do in the paper is we analyzed 4 options to unify. The first one we call raw Big Bang, which is the more orthodox approach. You do everything cold turkey first day, and then you die. The second was sector by sector gradualism. This is what the Cubans are doing. They're trying to unify in agriculture a little bit, in this other sector a little bit. I think that's messy, and it's not going to maximize the gains. The third option is what we call economy-wide gradualism, which is you pre-announce that over the next year you will be slowly unifying the 2 rates, and later you will get there. We see some pros and some cons there, and the one we think should work, because this is essentially a fiscal reform, is to do a fiscally cushioned Big Bang. And by that we mean unified exchange rates on day 1, but on day 1 you replace the implicit subsidy and tax that is in the current system with an explicit lump sum subsidy and tax. This would be important because if you don't do that, on day 1 of unification, foreign hotel operators will make a windfall profit out of this world. And so that's not a type of pattern you want to follow. So initially you want the system to stay fiscally the same, give yourself time to dismantle the lump sum subsidies and taxes. The advantage of this system, the one I like the most, is that on day 1, you not only unify the exchange rate, but on day 1, you know which public enterprises are most heavily subsidized, because in the first day you have to give them the lump sum. And so everybody in Cuba would know that this public enterprise is getting zillions in subsidy and this one is getting less in subsidy, and that should create some incentives to do public enterprise reform. Okay, let me stop there.
I will let you in on a dirty little secret while the others are coming up here, which is that sometimes, I don't know how many of these lunches I've been to, but sometimes I really need coffee sort of make it to the end. I definitely did not need any coffee for those presentations. It's absolutely fascinating. So we will open it up to questions. Please identify yourself and your affiliation, and if it is directed to a specific individual, please direct it to that specific individual because we have 3 people up here and we want to keep things moving.
start, I should have acknowledged that Kathleen Semino, who is here, did a tremendous amount of work on this study, and we should have recognized her at the beginning.
Thank you. Okay, so to start right here. We have a roving mic, and then we have a mic sitting up here in the aisle, and you can take your pick.
Hi there. My name is Carter Doherty with Bloomberg. I have a question for you about what else could be done to open up the sort of political space around and make changes to the embargo possible. Obama has done what appears to be possible under the law, at least as far as I understand. That makes room for a modest amount of trade, but I wonder whether that makes room for enough that there's a constituency in the United States that would then really push for ending the embargo. This is not China where, armies of companies jump out of their seats to try and make this happen. It's 11 million people, 71 billion GDP. And I have my doubts as to whether 5 or 10 years from now, the current relaxation would result in enough sort of two-way economic interaction that there's politically vested interests in expanding that. I mean, is there more that could be done under the current law? And I give Gary Huffbauer lots of credit for creative thinking there, but I mean, you need some political opening before that's going to happen.
My short response would be that Congress has to be on board. I think the administration has gone as far as it can and maybe a little further than the strict interpretation of Helms-Burton would allow. And there are obviously some congressmen and senators who don't like as far as it's gone. So those interests in Congress have to be brought. But I think there's a real potential for bringing them on board, because there are many U.S. companies which want to do business in Cuba, and they are not shrinking violets. And there are many Cuban Americans, especially the younger ones, who'd like to have more normal relations, and then there'd be some possible compensation for those historical claims. So I think there's a residue, or not a residue, it's more than the residue. There are building blocks for pressure on the U.S. side. On the Cuban side, it's a bigger question in my mind.
Hi.
If people in the back want to ask questions, there's a mic here in the center, so just come on up. The roving mic's not going to be able to make it all the way back. Yes, please.
Hi, Rafael Romeo from DevTech Systems. Good to see you guys. For Augusto, I have a question. I know we've talked about your proposal to do the idiosyncratic lump sum taxes on each firm, and I know you went down to Cuba to present it. My concern has always been the implementation. It becomes a kind of Orwellian machine to have to administer a firm-by-firm tax. I wonder just how the Cuban authorities reacted to that. And to Barbara, the book that you guys wrote, and Gary, is outstanding. I'm not sure if you anticipated $50 oil in the Venezuela issue. I would wonder your reactions on that.
Should I take this one? Okay. So the implementation of any of the options to unify is extremely complicated, and the complications are fairly comparable, but they are of different nature. I think the implementation of the current approach, which is to unify at different speeds and in different degrees for different sectors, is even worse, because you get even more fog into the price signals. And you get, instead of 2 exchange rates, you're going to get 200 exchange rates. And the system will become even more difficult to manage. However, from a political point of view, that's more palatable, because you can start with the less distorted sectors and deal with the most distorted sectors at the end. So implementation difficulties abound no matter what you choose. Clearly, the proposal that we have, and I presented this to some Cubans. I was not able to, of course, speak to a lot of the authorities, but the Cuban academics and so forth and so on. The difficulty with the proposal we have is that it is too transparent, because on day one, you know which state enterprises are more bankrupt, which need to be repaired, because it's going to be very difficult to tell the Cuban population for too long, why am I subsidizing this particular state enterprise so much at the expense of labor, no? So the transparency is a bullet that has to be bitten at the beginning, and that politically is very complicated. Other than that, the system we propose is in implementation, it's simple, because you can ask the central bank tomorrow who sold currency at 1-to-1 and who bought currency at 1-to-1, and you know exactly. So you know that this particular enterprise would need this subsidy or this tax. But it is the transparency, that's one. And the second difficulty with our proposal, which is politically complicated, is that once you put the lump sum taxes and subsidies in place, you have to dismantle, and you have to be credible in your commitment that you will dismantle them over the next 2 years or so. But then political forces will arise to try to keep the subsidies in place. But at least you have something that is visible for the people. So I fully agree with you that implementation issues are gigantic, and I think that implementation issues that are of a political nature tend to perhaps be a little more complicated to deal with implementation issues that are purely technical.
And on the anticipation of the oil price, Rafael, you give us a lot of credit. Thank you. We did not, but we did anticipate that Venezuela's economic difficulties would make it difficult for the continuance of the subsidies to Cuba, and thought that that would be one of the factors precipitating a need for negotiation between the two entities. We didn't predict it so rapidly. And I think that that is causing pressure on the Cuban government. And some of the responses, which in the media tend to be seen as Cuba is making demands, you could see as Cuba is starting to negotiate, and perhaps will bring about change more quickly. But who knows? No, we couldn't have anticipated $50 oil, so who knows what we'll be talking about in 6 months down the line.
So before I go to the gentleman at the mic, I would like to ask a follow-up question on the exchange rate issue. You had to go through the material very quickly at the end, but your fiscally cushioned Big Bang struck me as being somewhat like the dual track system implemented by China in the late 1970s, in which enterprises were basically frozen into operating on the existing plan, but growth beyond that was done essentially on market terms. So my question is this: suppose we implement your plan, and I'm a foreign investor, an American investor, and I come in with a new project. Am I coming in at a neutral kind of tax subsidy scheme, while the old system continues to sort of adjust? The new activities are coming in at a more neutral system.
That's an excellent question, hugely important. The beauty of a lump sum tax or subsidy is that it does not distort incentives at the margin. So the lump sum taxes and subsidies only apply to existing enterprises. If I already have a lump sum tax in my existing enterprise, or a lump sum subsidy in my existing enterprise, whatever I do is not influenced by the fact that I have the tax or the subsidy, because whatever my effort is will be the same irrespective of the subsidy or taxes. A new enterprise doesn't have to pay the lump sum taxes and subsidies, so the new enterprise has a little bit of an edge. The old enterprises have the advantage that they already are in the market, they know the market, they have their installations and their buildings, and the foreign hotel operators like Meliá already have an important market share. But the new hotel operator comes in without the lump sum tax or subsidy, and for the new enterprise, what will govern is whatever the new tax system is in place, which will apply to everybody. So the beauty of the lump sum taxes and subsidies is that at the margin, everybody's the same. And everybody's already facing new relative prices, new rules of the game. The lump sum subsidies and taxes are only to deal with a legacy problem of the past in an orderly way.
Yes, please.
Thanks. Sean Donnelly from the U.S. Council for International Business. Gary, I wondered, could you talk about the economics, but also the politics looking forward on the compensation for expropriation issue? I mean, some of these claims were, Cuban citizens who later became American citizens. Some of the assets have been repurposed in Cuba, are now run by Europeans or others, and how that might play out and how that might complicate moving forward on some of the trade and investment issues you lay out. Thanks.
Thanks, Sean. You're absolutely right. These will complicate. They are enormously big issues. We didn't discuss them at great length in our book. We did discuss them a little bit. So let me just touch on a couple of aspects. One is the point you mentioned that many of the claims are by people who were Cubans when they lost their property and are now Americans. Historically, the United States or other countries would not espouse the claims of such people. You espouse the claims of your own citizens at the time the property was lost. However, that historical approach will not work politically in the United States now. So what we need is some kind of commission jointly established which will adjudicate the claims of such people, that is, Cubans and their descendants who are now American citizens who lost property. That's going to be messy and difficult. I don't think it can be sidestepped. One supplementary point to that is I think right at the get-go, the U.S. government should say it will not espouse the return of physical property to such people. It will be a matter of a monetary adjustment. If you go to the German solution, that was their solution, and it was obviously the right one. You try to return physical property, and you have created enormous problems. Secondly, there are claims by U.S. companies and by U.S. citizens who lost their property way back in the 1960s, and those have already been adjudicated. So that's known, at least the numbers are known, and now then it's a matter of negotiating settlement terms. Big work for the State Department, but very important work, and when we come back to the political constituency, I think that constituency will be very important in the normalization process, and without appropriate compensation or some compensation, there will be a big blockade or a big block to going forward with normalization. I want to just throw in a gratuitous comment on this exchange rate issue, which I agree with Augusto is quite fundamental, quite important. This is an issue I would urge the Congress not to get involved in. This is an issue for the IMF to work out with the Cubans and the World Bank, IMF, to work out with the Cubans, all the fiscal adjustment and so forth. My proposal for the Congress and administration in negotiating with Cuba is much, much more incremental. And so, yes, you might have this grand approach. It might work. It might be very messy. It might not. But the U.S. could insist, bit by bit, some marketization, getting around this exchange rate difficulty going forward.
Anders Auslund.
Oslund, the Peterson Institute. Thank you very much. I would like to talk about the exchange rate also, on what Augusto talked. The conclusion sounds fine to me, but this is much more like the Soviet Union. This is like the Soviet Union 1988, what we are seeing. And what happened there was that the state enterprise managers took over, got massive rights, which seems to be a process that is happening now in Cuba. And then they got the opportunity to privatize their arbitration gains from exports and also from imports. So the political economy argument here, I would suggest that you add. And the other is that look more upon the former Soviet bloc countries, where you had exactly these kind of exchange rate differentials, and that led to very high or hyperinflation, which I think would be the natural process if what we are doing now proceeds. Well, you might be able to stop it with your proposal. Thank you.
I think that was a statement, not a question. Yes, please.
I'm Charles Lane, the Washington Post. A very brief comment followed by a question for Augusto. I would like to thank you for a presentation that clarified stunningly that Cuba today is a country that operates based on the super exploitation of labor for the benefit of a handful of military officers and foreigners, which is exactly what they had before the revolution. My question has to do with your fourth option, the fiscally cushion Big Bang. That fiscal price tag strikes me as very large. With respect to what Gary Huffbauer said, the IMF might be able to handle it, but don't forget that's U.S. money and Congress might want to have something to say about it. Can you give us any sense, based on your study of the Cuban economy, how big a bailout this place needs? Thank you.
No, unfortunately, I don't think I have sufficient information to get a sense of the bailout. There's one, however, important fact to keep in mind in this option of exchange reunification that we dreamt of, so to speak, and that is that it's fully financed, because exactly the lump sum taxes are sufficient to pay exactly the lump sum subsidies, and the whole thing comes out to the surface and becomes transparent. Your point about political economy is hugely important, because the managers of enterprises that get huge subsidies have a vested interest in keeping the system and in keeping it non-transparent. So to avoid what you call the Big Bang monopoly capitalism, transparency is an important tool. So to make the financial condition of public enterprises transparent, I think is hugely important. And that's what I see as an important merit of this system. I wanted to say just one point about this interesting conversation that Gary started about things that can be done. I suspect that a couple of things that can be very helpful to ease the process and create incentives or reforms would be, one, to recognize that Cuba does have some comparative advantages. The way I say it is Cuba has comparative advantage in producing certain public goods and is very lousy at producing private goods. But for instance, medical services in Cuba are a notch above the average of Latin America. They have very good system for doctors and for nurses and medical facilities. So any opening along the lines that Gary was suggesting, where the US or other advanced countries are willing to buy medical services from Cuba, can have a huge goodwill impact on opening up the possibilities of change. The other thing that I think is very important is that the international community needs to find a way, which doesn't exist right now, to facilitate a very significant wave of technical cooperation. Cuban officials, Cuban economists, Cuban policymakers have very limited information on experiences around the world. And they are eager to learn what has happened in Vietnam, what's happening in China, how transitions are happening. And right now, the channels to make that information and that technical cooperation available are non-existent. Institutions like the IDB, like the World Bank, like the IMF, really cannot do anything about it under the present system. So some thinking about exchange of information and technical cooperation seems to me crucial.
Yes, please.
Krista Hughes from Reuters. A question for Barry or Barbara or Gary, rather. The bill that was introduced to Congress today that would end restrictions on travel and allow banking transactions associated with that travel. Do you expect that bill to pass? And then, Gary, just to follow up on what you said earlier about perhaps the administration having gone too far, what could opponents in Congress do to wind back some of those steps that have been taken, or to stop any further widening of the policy?
Why don't you take the first one? Go ahead. Do you know anything about the bill? turns out we don't know much about this bill, but my guess is it will not pass. And the reason I don't think it will pass is because it did not deal with the conditionality angle that I mentioned in any way, or any compensation issue. Okay, so that would be my guess, but I you may have a better vote idea on the votes on that, and I may very well be surprised. Now, what can the opponents of the administration do? Fact is, they can't do very much. They could bring a case. It won't go anyplace in the courts. What they can do, and they make the political argument that has gone too far. President Obama's gone too far. He's giving money to Castro. Castro's not doing any reforms, and you know the political case as well as I do. So that's what they can do, and they can wait for examples of clear abuse. And I think the administration opened up itself to abuse with this very long list of people who can travel there. And it won't be long before somebody travels and comes back with a very good suntan and whatever. And their so-called cultural connections were of the sort that Augusto mentioned, which, and some politician will grab hold of that. And then it will be exposed. So I think it'll be political opposition, but I do think that political opposition will make it harder to do the necessary reforms of Helms-Burton.
Politicians grabbing hold of it. I think the politicians might be the ones availing themselves of such opportunities. Barry Wood.
Economics columnist. Having just come back from Cuba, these distortions you mentioned, Augusto, in terms of the exchange rate, I mean, they may be apparent to intellectuals, but I think the average Cuban is not aware that this is offensive to the socialist ideal. Given all those risks, why would the authorities want to move ahead on unifying the exchange rate? Wouldn't it short term be easier just to keep it the way it is?
In a myopic short-term view, and just looking at the interest of the current status quo, you're absolutely right. In fact, my anxiety about this is that there may be insufficient incentives to do this reform, because the pain and the loss, the losers know who they are, and they will oppose. The winners are not born yet, and they are the Cuban population. They are not organized. So you have the classical collective action problem where losers know who they are, they can organize themselves, they have access, they have voice, they have power. The winners are diffused. It's the society at large, people that don't fully understand that, and they cannot mobilize coordination. So you have a basic public policy problem. But the sense I get is that there's a group of high-level policymakers in Cuba that understand the costs to the economy of the system. They fully understand that it is a major constraint, that a lot of inefficiencies hidden under this dual exchange rate regime, that it creates awful incentives, makes Cuba very expensive for the tourist to start with. Because the tourist, whatever the tourist pays doesn't go directly to the workers in Cuba, they go to the different employment agencies. So I feel that there's consciousness. When I read the lineamiento number, I think 120 something, that describes the need to reform the exchange rate regime, I was amazed with a very modern language that was employed in describing the problems of the system and the need for reform. So there's this duality between a well-understood problem by some and huge resistance by the incumbents and the status quo for change.
Thank you. Lady right here.
Thank you. Karen DeYoung from the Washington Post. Could you explain what restrictions exist under the state sponsor of terrorism list in terms of economic openings that will not go away, that will go away under the restrictions that remain under the embargo, if any? And also, do you see any merit at all in Cuba's claims for compensation? They say they're owed $1 billion from the embargo. Thank you.
I'll just preface this by saying that I'm not a lawyer, and so the statements that I make about the state-sponsored terrorism removal, it removes restrictions on, it limits the U.S. Putting restrictions on financial assistance to Cuba. It eliminates restrictions on some foreign companies doing business with Cuba and allows more paymenting. It facilitates payments for goods in Cuba. I don't know.
Yeah, I actually know something about this because it applies to North Korea. What it does is, if you're on the state-sponsored terrorism list, United States executive directors at international financial institutions cannot vote for your membership in that institution, and if you're already a member, they cannot vote for loans to be given to you. It, I think, automatically puts you on the Wassenaar list, so we obviously are not going to be sending you any military technology, and it has these other ancillary financial restraints that Barbara mentioned. What's interesting is that there's a lot of focus on that list for obvious political and diplomatic reasons, but from an economic standpoint, when you look at the actual countries that are on the list and how they may be affected by removal, it's really almost, or by putting them back on in the case of North Korea, it's almost more of a symbolic gesture. The direct practical implications are generally pretty limited.
Question on the Cuban claim.
Oh, whether the Cuban claim of compensation for...
Oh, yeah, the Cuban claim of compensation for the sanctions. Well, the U.S. cannot tolerate this. They can talk all they want about it. You know, if you you can read our other book. You can even buy our other book on sanctions. We've been sanctioning countries. You know, we're the dominant sanctioneer, and you start allowing some claims, where are you going to stop? You know, Russia's going to bring in its claims. This is ridiculous. The Cubans know it's ridiculous.
Yes, please.
My name is Peterson. I used to work for the OECD and for the IMF, and I'm now retired. I want to thank the speakers for their presentation, which I think was a discussion of reform from an outsider's perspective. And Barbara conveniently classified 3 reform models, like the Chinese model, and the Russian model, and the Polish model, and made it very clear that from an outsider view, the Polish model is clearly preferable. My question is there any clearly formulated idea the Cubans themselves have? Where do they want to go, and do they agree on where they want to go? And is their idea or their plan taken into account, or have they actually presented their idea of reform? Or are they just sort of listening what outsiders say and see how they can maximize their foreign exchange earnings? My question is, what is the Cuban plan? We know what we think, or we think we know what's good for Cuba. Do the Cubans know what they want and what they consider best for them?
Well, I'll start. I mean, obviously, I think it's clear that the Cubans have put a lot of thought into this, and recent Cuban statements reiterate that the Cubans like their political model and intend to retain that. They would like to move slowly but surely to a more open market economy in a way that maintains the socialist ideals. As to how open they are to others, I think they're open to others' ideas in the way that helps them move towards that goal. How things will actually go may differ from how the U.S. wishes things to go and how Cuba wishes things to go, but I think that, you know, Cuba has been rather clear on what their intentions are. They would like to use increased engagement with the United States to help bolster their model, to help increase the welfare of their country, and to continue the model that they at least in official statements, think is working quite well.
The times that I have visited Cuba for conferences and things like that, I have always been amazed how almost unexpectedly warm the feelings of Cubans are towards the United States. They would like to be able to watch more of the baseball and basketball, and they think the U.S. is just a few miles away. So I didn't feel that there's a strong animosity there. There's quite a bit of excitement about the possibility of having more interaction with the United States. The balance between economic growth and the ideals of social equity is one where I think Cubans can benefit from international experiences dramatically, because the world has figured out how you can get the two. Not always well, but you know that you can have good social policy that creates a fairly equitable society, as you can see in Europe or in South Korea and other places, and yet a very vibrant, growing society. But to manage these two, to separate social policy from growth policy is very important in Cuba, and they do not really know how to find a path. Look at, for instance, the small entrepreneurs. Now you have a lot of small entrepreneurs, the hairdressers, and they sell you shirts and they do things for the tourists. And these small entrepreneurs are very active, very creative. They cannot buy their inputs directly. They cannot trade freely, but they are actually doing well. And the Cubans do not know how to handle this, because they are not used for some people to do much better than others. And so accepting this type of the simple fact of life, that more effort, more creativity may make you better off than others, is not something that's easy for them to see given their history. So they need to figure out a way to accept these differences that result from more effort, more creativity, while at the same time making sure that they are not going to have homeless in the streets, and that they are not going to have an immense and unmanageable inequality. And this is why I find that they have very little understanding of international experience as to how to balance the two objectives.
Thank you very much. As the host of gatherings such as this, one walks into the room with a certain amount of anxiety. One is always afraid that when it comes time for the discussion period, there will be this dead and somewhat embarrassing silence. So you have to have at least one question prepared just to get things going. And in this case, I'm not a particularly malicious person, so I was going to keep Augusto and Barbara out of it. But I was going to ask Gary about the implications of all this for possible normalization of economic relations between the United States and North Korea. Fortunately, the discussion was so interesting and the audience participation was so enthusiastic that I was not forced to resort to this desperation move. So I would like you to join me in thanking, well, first I'd like to thank all of you for spending your time with us this afternoon. I would like to remind you that the book, Economic Normalization with Cuba, A Roadmap for U.S. Policymakers, is on sale. I very much like Barbara's idea of using it as a Valentine's Day present. I mean, it's about normalization, it's about integration. There's a kind of, romantic aspect to it. And I would like you to join me in thanking all three speakers. Meeting adjourned.